Okay, good morning, everyone. All right. Those of you in the green room, just so you know why I'm starting the day saying what I'm saying. The title on YouTube today is I Love the Market, but the Education Sucks. And the reason I came up with that today was someone sent me a link on YouTube and I looked at, and there were two of them. One was trying to take advantage of the current market moves. Basically, here's these big moves, and now I have this indicator that I have and have sold, and I've now made it like a super indicator to take advantage of these giant moves that are happening here and all the money that could be made. Blah blah blah, and it just makes me feel a little bad about the industry that I'm in, that there are these people out there that are taking advantage of others in a way of here, well, I had this indicator, but now I've created this ultimate thing in this particular market that's going to make all this freaking money for you. And I didn't like that. And then the other one, that that's been around a little while. Some of you know of it, of course, but here's another one that's just like, here is this fantastic best setup here that I teach traders, and it's so fantastic, yada yada yada. And after you pay me a whole bunch of money, I'm gonna put money in your account up to $1 million if you can make a couple of $1,000s. And I tell you, this industry is just filled with so many bad things out there, that buyer beware. And those of you that are here on YouTube and you going and watching these YouTube things and guys that are out there selling indicators and promises of riches with little education or just one price pattern, your money is going to evaporate. And this market that we have right now, I love it. It reminds me of, excuse me, some many years ago where there was these giant moves. But I'll tell you, you had better be on the top of your game as an intraday trader and know how to understand what's happening there, or you will get destroyed, and it'll happen fast. So, like anything else, you get education and you assimilate it, you ask questions, you practice, and you internalize it, and you make it your own. And going out there buying indicators or promises of this is so simple, my kid could do it, run like the devil. Okay, so that being said, I've given you my morning spiel, and I'm going to put it up right now. And where are we? Here's e-signal. Okay. Yeah, I'm sure you have, Gerald. There's just different flavors of the garbage that's out there in the markets all over the place selling education. Anyway, where are we at here? Markets are volatile, whipping up and down, and it is just a bar by bar analysis of making your head spin. I'm bullish. No, I'm bearish. I'm bullish. No, I'm bearish. No, you don't know what the heck you are, right? Because the market is just gyrating after this nasty drop. And this turn here, it's just crazy. It's wild. Intraday, it's great. Swing trading, it's just not there yet. People that are trying to swing trading this, they're just getting punched in the face back and forth. They're probably hitting stops only to wish they didn't hit the stop. And it could be a very, troubling, difficult time. So we just have this gyrations up and down here, right? It hit from what we looked at on Monday. This came up to this level, and we had this gyrations of, what was happening with the Fed, and this is where we started Monday in the pre-market analysis, where I created this area here. And I say, look to the left, look to the left. It came up here, whipped back down, and then it rallied back up yesterday, and it came up to the prior high, and now it's back down, and it's here where these bottoming tail bars are, and buyers beginning to step up there. Of course, that's where they were before, but our retracement concept says this is a problem, right? You've got this measured move to the downside. Now it's at major support. Buyers stepped up. They had one shot here. It doesn't mean they can't turn it around, right? It's a 60-minute chart. It may take a little bit of time. But you can see it's struggling here. It's not just hit the support level and a lift off and moving back up again. So we'll see what this does. I don't count this out, for buyers to be able to push it back up, but they were hoping for this to gap up today. And the gap up today would have created this area as a price support level that could have been bought into and then possibly push it back up. But they could not, right? Those buyers could not get it through this level. And they really needed to do that yesterday and, or overnight. And then once they did it, this pullback should have come right back up here. And it should have went sideways here showing, look, sellers, give us whatever you got. We're taking it, and we're going to push this market higher. And they ran away, right? More Corona this and Corona that and hand sanitizers and, so on and so forth. And terrible to hear about the people that are dying and all of that, of course, but the market is worried, right? I guess it should be worried. But what's going to happen now? Well, it either holds in this area. If it can rally back up to say 3,100, maybe it's going to hold and go sideways here and eventually move up. I really don't know at this point, but if it goes sideways here and it can't lift off, odds are it's coming down here. And then once it comes down here, I think, there's an expression, put a fork in it, it's done. Then I think it does go down. I don't know about tomorrow or next week. It's going to come down here. It's going to break this low. And I think we're going to have a great opportunity at that point. And one of the things that leads me to believe that is this amazing chart that I shared with some people last night. When I looked at it, I was like, wow, this was what was leading me, besides the market internals, the wrong way option traders that were loading up on call options up here, right? And thinking this market was going to explode higher. And at the same time, these very short-term yield curves were beginning to deteriorate and invert. And it's like something's very wrong here. Breadth is deteriorating. These yield curves, the most narrow here, or the shortest terms are inverting. Something's wrong. And lo and behold, now the truth comes out, about this virus thing, and down it goes to support. And now, obviously it's trying to hold here, bounce off of support, so on and so forth. And last night, this yield curve's like, wow. Now, this does not move markets on a dime. Typically, it usually takes a little while. So the pain could still be coming, but this is a very good sign to put a floor under here at some point, should it break it. Now, think about why is this all happening? Because we see what we see here. Let me get to another chart, is that the bond market's up again, big, right? Looked like it was turning down yesterday, and that helped the markets move up, right? As yields moved up and bond prices moved down. Well, one of the things we have to look at here, if I can find my charts, that's not the one. Maybe it's this one. No, that's an intraday chart. Well, maybe it just happens in here. Here we go. 13-week T-bills. The Fed already cut half a point, and this thing's falling like a rock off of the roof, which it's communicating to the Fed, you didn't do what we wanted. We wanted 3/4 of a point, right? And we want more. And this, short-term yields coming down like that is why those yield curves improved, which is saying, Fed, you're going to have to do more, because this thing that's going around, it's serious and it's going to be a problem, and you need to provide more liquidity. And so the markets here are doing it. We'll just see. I'll continue to monitor this and see where it goes. But should the markets come down to this level down here, and this is the next support, I don't know, it may just break this low and come down here. But this information is supportive to say, you know what, when it gets down there, if it gets down there, I'm not predicting something like, okay, it's going to happen 100%. If it gets down there and we see that bottoming tail bars like we're seeing over here, and we start seeing some kind of pattern like this or whatever it might look like, that bullish, improving bullish yield curve is information to say that is supportive of buying this new low when it's going to look really nasty. So, you know, something like that, that market internals and intermarket analysis, you know, we look at the patterns and we're like, oh, I see the pattern. What do I need that for? Well, for me, it gives me confidence that that information is supportive of what I've seen over decades that helps the market make a bottom. So, you know, we'll just see how it all plays out. And of course, you know, today is a new day. And at the end of the day, right, we want to see where this bar is. Does it stop here at the 200? Is it a bottoming tail bar? Or is it down here at 3,000? Right? We don't know. But looking at the intraday charts where you see buyers are beginning to step up, if they can't lift this up and get it to move up significantly from here, it's pointing to coming down here. So that's the bias. Right now, I'm not interested to short this because it's already fallen from resistance down to support, and that would be foolish to be shorting at this point. So I need to see some information here after a little while, the open, to see what the reaction is. Once everybody is here, start pressing the buttons. Dan, someone says, guys need to slow down. I don't have enough money to sell puts. Well, make adjustments there. I don't know what to tell you, right? Well, you know, when Dan puts in from, Dan is like a machine gun, and rightly so right now, because moments like this are where, you know, guys like Dan that focus a lot on spreads and exclusively options clean up, because it's like a kid in a candy store. And it doesn't happen that often, but I'll leave that for him to explain more. All right. So same story here with the NQs, possibly a little breakdown failure at support. It's a pattern that makes sense, but same story here, right? Up, down, up. You know, so far looks like it's going to be down. YM, same story. It's been, I was actually showing relative strength yesterday. I mean, the markets toward the end of the day yesterday were like, really, they were grinding. It was like, what a battle, you know. And some of us in the green room, you know, we're long spiders, ES, Qs, and it was like, you know, a grinder, as I said. And eventually it did lift off there, and turned out to be a good trade. And so, you know, the hourlies at the time was supporting it. It could go up, and so it did. And was kind of odd that the Dow was showing relative strength at that time, but now it's showing weakness, and here it is down here. So we'll see where that all goes. Russell has been the weakest and deeply into that green bar already. So here's some information where we see the stall at the prior low, and it's failing. That suggests it's going to go down. Now, sometimes the Russell goes on its own, right? Meaning it goes up by itself without the S&Ps following and the Qs, and goes down by itself. So it's a little weird at times. And of course, you know, this is small caps, but you know, after a drop like that, an inability to lift much at all, bearish. Oil, kind of just jiggling around over here after getting down to support. And we already looked at bonds. They're up big. You know, they're not taking out a prior bar's high, but that was a red bar. So look, Red bar ignored, red bar ignored. Is it a little extended? Yes. They keep coming. That's bullish. Right? And it's coming up into resistance. So here's a scenario for the bullish case. Bonds rally up to 180, taking out the high. S&Ps blow through last Friday's low. Blood in the streets, margin calls, hedge funds out of business, you know, all the stuff that goes on, right? You get a bottoming tail bar after that. Bonds start coming in, right? VIX is at some level. The wrong way option traders are loading on puts again. Call up Kramer. Kramer, can you hit that buy button? That's one of the scenarios. Gold, coming back up from that nasty drop, coming up. That's kind of a wild move. Big wide range bar down and a wide range bar up. That's bullish. Silver, right? That one got pounded down, you know. So doesn't look so good. Gold is doing better. What did GDX do? Because that got shellacked last week. That's coming back strong too. Okay. And transports, right? Kind of like the Russell. Right? The transports and the Russell been having many moves similar to each other, showing relative weakness and relative strength at similar times. And another one that can't get off the mat. And it's not a good sign, you know, when you have the transports looking like they are and the market's acting like they do. But this is, you know, what was expected. And I said it at on Monday, and I said it in the letters over the weekend. And not that I'm right 100% of the time, but you know, this is what the charts say. Right? So what do I know? I know what the charts are in front of me. And you know, so we'll see where today ends. You know, YM now down about 700, almost 700 going into yesterday's range and breaking here. So obviously sellers are in control here, and you know, put your little crash helmets on again. We'll see how it all turns out. Well, that's it for me. All yours, Dan.
All right, good morning. Yeah, I mean, yesterday with the close, I was bullish with this 2-bar reversal. I said we're at 50% retracement in the video. I said the easy lifting's done. We might get one more up day, and we're getting another big old gap just like yesterday and cracking here pre-market. So we'll just have to manage the stuff we're in. We had a nice couple trades here on the afternoon breakout that are, they expire tomorrow. So they're short term. They aren't gapping under the stops. And we'll just monitor them. Excuse me, like spiders. We have 298 way down here. So we're still $5.70 away. We just need that melting ice cube. Just hold on, baby, until tomorrow. VIX going against us here. We had a call spread. I said move the stop 30-minute high, and I mentioned to Greg it was interesting that VXX, which is a volatility ETF, is making a new high here, whereas the spiders aren't making a new low, and the VIX is way off the high. And I think, you know, that's what I was talking about yesterday because of the backwardation that we're in. The ETFs actually has some tailwinds. Let's see, like, you know, I'm still keeping, we're in a couple puts on RCL, some that expire tomorrow. And I'm not going to do anything with them. We're short the $44 puts and a couple others. That's still $20 away for tomorrow. Does anybody think RCL is going to drop $20 in 2 days? I sure don't. I don't. That's, you know, they're all gapping down. So the things that are getting hit, obviously the broader markets, but also in particular, travel stocks, cruise ships, airlines. And that's why their puts are so expensive. So I'm still keeping an eye on these. I'm personally in some puts on CCL and love. But RCL, if it can take out, today's Thursday, if it can take out Tuesday's high, then I'll be adding on the puts. And also that's a directional. That's a climactic buy setup with a multi-bar bottom. So that's a no-brainer long. And I don't care what the news is. I don't care. It ain't going over that bar's high unless they think it's oversold. CCL has another ship off California. The paper said it was going to Mexico and Hawaii, and they're sending it home. So it's gapping down. So yeah, I don't like the pattern of that. Well, also if this takes over out Tuesday's high, I like it. But I like RCL better because it's more extended. Yeah, I saw that, Timmy. And then hotel stocks. We've been watching Hilton, Marriott, Hyatt. There's others too. But this is a nice multi-bar reversal with major support on the weekly. So I like this one a lot. It's gapping down, which is fine. We're not entering it yet, and we're not in it, but it's gapping down. Well, see, now the gap down is deep into this real body. But let's say it fills the gap in the first hour. Then we'll be selling put spreads on that today. And yeah, the guy on or whoever on YouTube said, yeah, you're running out of money on put spreads. That's exactly what yesterday's MT Live was focused on. Trading crashing markets, stocks and options, but we focused a lot on options because this is a perfect storm for doing it. We started doing it Friday into the close. We pounded on them on Friday. Tuesday, we were in defensive mode. Yesterday, we went on the offense a little bit. Let's see, somebody on YouTube asking a question here. April and June, CCL trapped in 37 and 42 puts. CCL 37 and 42. Loretta, I'm trying to be polite here. I don't know when or why you entered them. But look, this was an M top on the daily. Look, that was a nasty M top. Cracking support, all the moving average is down. This is a bearish descending triangle. Look at this. If you draw a trend line here and here, this was a nasty gap. So Loretta says she's short the 37 puts, and so you're deep in the money. So that's in essence, your negative deltas are very big. So that's in essence being short the stock. So Greg and McGraw, you can answer the same as I. It's just it's a question of what do you do when something's going drastically against you. Pretend you're long the stock at 37 bucks and 40 bucks. What do you do now, Greg? What do you tell somebody? McGraw says he's long at 40. What do you do?
Pray.
Right, but in terms of what can I tell her to do? I don't know. It's extended, so you don't want to cover at the low. It's not ready to add. Yes, McGraw's right. You can sell some out of the money calls, but I surely would have done that on the way down. But it's still a bearish gap here. So yeah, I would sell some out of the money calls for next week. Yeah, I would.
But Dan, if you sell out of the money calls and it goes up there, now they take it away.
Well, correct. And you didn't let me finish. Correct. I would sell the out of the money 36s for next week. So that's 8 DTE. And then and then depending on when it broke out, you're still getting time decay and hopefully volatility contraction. But once it turns into a bullish position where you want to be more bullish, then you got two things. You buy those calls back to close and they should be at a profit, or you can roll them higher. So that's my response to that. All right, let me continue here. So yeah, Hilton, I definitely like that reversal. Marriott is sloppier, and it could go over Tuesday's high, and it's also similar here. It's got the major support. But I like Hilton the best. So that's on my list of travel stocks. VIPs here. Gap's too big, 1470. But this was a nice bottom because you got a gap reversal. It went deep into here, jiggled around 2-3 bars. This was a nice reversal pattern. APHI gapping up 18. This could be a fantastic day trade, 30-minute high. So it's gapping up here, 15-minute chart. Price void, maybe it goes to 22, 23, 24. Keep an eye on that for a day trade long 30-minute high. I just saw this ticker going by and I'm like, I've never heard of who is. And I noticed it was a recent IPO. Look at the beautiful breakout right here around 1080 after negating the IPO day red bar. That was a very viable breakout. I never heard of who. But I'll watch it. It's still, it came down 2 ugly days, but it's in an uptrend. CanF 208, it's sloppy. Meat gapping down. I got no interest. That's too volatile. Zoom had earnings. This was, look at this beautiful gap breakout. This we, I think, had a put spread over this bar's high, and then the gap breakout there. We didn't get our credit. That's been one of these like home stocks, meaning stay at home, along with Netflix. Ping, I don't like the way you trade. Oh, the home stocks, stay at home stocks. We did a put spread on this yesterday on Netflix that expires tomorrow. And we did the, way out of the money. I like the fact that it's rebounding right now. So it's showing relative strength this is the best looking 15-minute FANG, just as it was yesterday too. So that's a good sign on that put spread. It must be, yeah, it's earnings. But for earnings, this would have been a beautiful longer put spread because this is a 180 reversal with a price void. But the gap's messing it up. So you're going CMTO 27 bucks. That's an ugly gap. Nothing to do with it. Splunk. I heard Kramer saying it was up $5 last night. Now it's down. Now it's a big old mess. Marble 24.32. Bullish gap, relative strength, but no pattern. CGC, I read in the journal, marijuana stock, that they are laying off 500 people, taking a $700 million charge, and then Greg chatted me that Tilray got a downgrade to 0. And do you remember? Remember Tuesday, I said this thing looks nasty.
I don't think I've ever heard a downgrade to 0.
Yeah,
that is what a call. Wow.
I agree totally. What do we got? CCRN had earnings, but nothing there. KR. KR reported maybe over 31. I mean, maybe. I don't like the pre-market, Debbie. And I don't, I don't buy after 5 up bars. The only way I would have bought this over 31, Debbie, is if it had a bullish consolidation pre-market, and this pre-market is a mess. So I have zero interest in that myself. Rev G's and pain, nothing there. Maybe I'm just keeping an eye on our opens over here, VXX coming in. Maybe there.